Would you trust a robot with your life savings? AI-powered financial advisors are revolutionizing money management, but can they really replace human expertise? Today we're diving deep into the battle of AI versus human financial advisors to see who truly makes better financial decisions and why it matters for your future wealth. The rise of artificial intelligence in financial advising is transforming how people manage their money. AI-driven financial advisors, commonly known as robo-advisors, leverage machine learning, big data, and complex algorithms to offer automated investment strategies and personalized financial planning. Unlike traditional financial advisors, these AI-powered platforms require little to no human intervention, making financial management more accessible, efficient, and cost-effective for everyday investors. One of the biggest advantages of AI-driven financial advisors is their significantly lower cost structure. While human financial advisors typically charge 1 to 2% of assets under management annually, robo-advisors charge a fraction of that, usually between 0.25% to 0.50% annually. Some platforms like M1 Finance even offer zero-fee investing options, making them attractive for cost-conscious investors. Lower fees mean more of your money stays invested, allowing it to compound over time and grow at a faster rate compared to portfolios managed by high-cost human advisors. Unlike human advisors who operate during business hours, AI-powered financial platforms work around the clock. Robo-advisors continuously monitor, analyze, and rebalance investment portfolios based on changing market conditions and adjust instantly to minimize risk and maximize returns. Suppose the stock market experiences a sudden downturn overnight. AI-driven platforms automatically reallocate funds to safer assets, ensuring that investors don't wake up to significant losses. One major downside of human financial management is the impact of emotions on investment decisions. Fear, greed, and panic often lead investors to make irrational choices, like selling stocks at a loss or buying into a bubble at its peak. AI eliminates this problem by making purely data-driven, logical investment decisions, analyzing millions of data points in real time, and identifying optimal strategies based on historical trends and predictive modeling. AI financial advisors aren't just for beginners, they scale to meet the needs of every investor. Whether someone is investing their first $500 or managing $1 million portfolio, AI systems personalize investment strategies based on individual risk tolerance, financial goals, and time horizon. A young professional looking to grow their wealth aggressively may have a portfolio with higher risk, high-growth stocks, while a retiree may have AI-optimized bond allocations for stability and passive income. Platforms like Betterment, Wealthfront, and M1 Finance have revolutionized investment management by offering AI-powered portfolio optimization. Betterment automatically adjusts portfolios for tax efficiency and risk mitigation. Wealthfront offers sophisticated AI-driven risk management and tax loss harvesting to boost after-tax returns. M1 Finance allows users to customize pre-built AI portfolios with stocks and ETFs tailored to their preferences. AI-driven financial advisors are shaking up the wealth management industry by offering low-cost, highly personalized, data-driven investment solutions. While human advisors still play a role in complex financial planning, AI's ability to provide cost-effective, scalable, and emotion-free investing is changing the game for everyday investors. While AI-powered robo-advisors have revolutionized investment management with their efficiency, affordability, and automation, they still fall short in areas where human expertise is invaluable. Personalized financial planning, emotional intelligence, and strategic decision-making remain key strengths of human advisors, making them indispensable for complex wealth management. AI platforms follow algorithms based on historical data and market trends, but human advisors provide personalized, real-world financial planning tailored to individual needs. People's financial situations aren't just numbers on a screen. They involve family dynamics, career changes, unexpected emergencies, and evolving financial goals that AI struggles to fully comprehend. A human advisor can help a client plan for major life events such as funding a child's education, managing financial transitions during a divorce, or preparing for the financial responsibilities of caring for aging parents, situations AI platforms cannot yet navigate effectively. One of the biggest pitfalls of investing is emotional decision-making, a factor AI simply cannot influence. Human investors often panic during market downturns, making rash decisions that jeopardize long-term financial growth. Financial advisors act as behavioral coaches, helping clients stay calm, avoid panic selling, and stick to their financial strategy despite market turbulence. During the COVID-19 market crash, many retail investors panicked and sold stocks at a loss. Human advisors reassured clients, guiding them to stay the course or adjust portfolios strategically, leading to significant recoveries when markets rebounded. While AI can optimize tax efficiency through automated strategies like tax loss harvesting, it still lacks the ability to develop comprehensive long-term wealth management plans. Human advisors specialize in multi-generational financial planning, ensuring assets are transferred efficiently and that clients minimize taxes on inheritances, trusts, and retirement withdrawals. A high-net-worth individual seeking to protect their wealth for future generations needs more than just an optimized portfolio. They require estate planning, tax-efficient gifting strategies, and charitable giving structures, all of which require a human touch to navigate complex laws and personal preferences. While AI is excellent at pattern recognition and automated adjustments, it struggles with unpredictable financial scenarios that require customized solutions. Human advisors think critically, adapt strategies, and factor in qualitative insights that algorithms can't quantify. A business owner planning to sell their company needs a financial strategy for tax-efficient liquidation, reinvestment options, and risk assessment, a scenario that AI platforms cannot effectively manage without human intervention. During the 2008 financial collapse, AI-driven trading algorithms failed to react appropriately to the sudden market downturn. Many automated portfolios saw massive losses as AI blindly followed preset risk parameters. Human financial advisors, however, guided clients through the crisis, helped them rebalance portfolios strategically, and positioned them for the post-crash market recovery. This level of nuance, experience, and emotional intelligence is something AI still cannot replicate today. AI-driven robo-advisors are a powerful tool for automated investing, but they lack the depth, personal touch, and critical thinking skills required for complex financial planning, behavioral coaching, and high-net-worth wealth management. For investors with straightforward financial needs, AI offers an affordable alternative. However, for those navigating life's major financial milestones, unexpected challenges, and long-term legacy planning, a human financial advisor remains essential. The battle between AI-powered robo-advisors and human financial advisors ultimately comes down to performance, risk management, cost-effectiveness, and personalization. While AI dominates in automation and data analysis, human advisors excel at tailored strategies, emotional guidance, and complex financial planning. But which one actually delivers better financial results? Let's break it down. AI-driven robo-advisors charge significantly lower fees than traditional human advisors, making them an attractive option for cost-conscious investors. With fees typically ranging between 0.25% to 0.50% annually, compared to the 1% to 2% fees charged by human advisors, AI allows investors to keep more of their earnings over time. AI eliminates emotional biases from investing, something that often leads humans to make irrational financial decisions. AI doesn't panic sell in downturns or chase overhyped stocks. It sticks to pre-programmed strategies, ensuring consistency in investment execution. AI can process millions of data points per second, analyzing market trends, economic indicators, and historical performance to optimize portfolio allocations in real time. Advanced AI models can detect early warning signs of volatility and adjust accordingly, something no human could do at the same speed. AI-powered platforms like Wealthfront and Betterment use algorithm-driven portfolio rebalancing to ensure optimal asset allocation at all times, automatically adjusting based on market movements. For individuals with multifaceted financial needs, such as business owners, high-net-worth individuals, or those planning for multi-generational wealth transfer, human advisors provide expertise that AI cannot replicate. Financial decisions are often emotional, and during stock market downturns, many investors panic and make poor decisions. Human financial advisors act as behavioral coaches, preventing clients from making knee-jerk reactions. AI lacks the ability to provide reassurance in times of crisis. During the 2020 stock market crash, many AI-driven robo-advisors auto-liquidated portfolios based on risk parameters, while human advisors encouraged clients to stay invested, helping them recover post-crash. AI can optimize tax loss harvesting, but it cannot provide the same level of strategic tax planning as a human advisor. A financial professional can advise on estate planning to reduce tax burdens for heirs, charitable donations and tax deductions that maximize benefits, and retirement withdrawal strategies that minimize tax liabilities. Human advisors can set up trusts, strategize Roth IRA conversions, and navigate estate taxes, areas where AI is still limited. A 2023 study by Morningstar compared the financial performance of AI-driven investment platforms, human advisors, and hybrid models. The findings revealed AI-powered robo-advisors achieved an average 5 to 7% annual return for diversified portfolios. Human financial advisors averaged 6 to 8% annually, but results varied significantly depending on the advisor's expertise and investment strategy. Hybrid models, which combine AI and human financial advisors, delivered the best returns, averaging 7 to 10% annually, due to the combination of automated efficiency and human strategic planning. AI outperforms humans in automation and cost efficiency, while humans excel in long-term strategy, tax planning, and behavioral coaching. A hybrid approach, leveraging AI for automation while relying on human expertise for high-level strategy, offers the best of both worlds. The decision between using an AI-driven robo-advisor, a human financial advisor, or a hybrid approach depends on several factors, including your financial complexity, investment goals, risk tolerance, and desire for hands-on or hands-off management. Each option has distinct advantages and trade-offs, making it essential to choose what aligns best with your personal financial strategy. AI-powered investment platforms are best suited for hands-off investors who want low-cost, automated portfolio management without the need for in-depth personal consultation. AI eliminates human bias, optimizes asset allocation, and keeps fees low, making it an attractive option for beginners and passive investors. You want low fees and automated investing. Robo-advisors typically charge between 0.25% and 0.50% annually, significantly lower than the 1% to 2% fees of human advisors. You're focused on long-term portfolio growth. AI-driven platforms automatically rebalance portfolios, ensuring steady compounding without frequent intervention. You prefer algorithm-driven decisions over emotional investing. AI eliminates impulsive, emotion-driven trading decisions that often hurt returns. You don't require complex financial planning. If your investment goals are straightforward, like retirement savings, college funds, or general wealth building, AI can effectively manage your portfolio. A young professional who wants to invest a portion of their paycheck every month into a diversified portfolio can use Betterment or Wealthfront for automated investing with minimal involvement. The AI will handle risk management, tax loss harvesting, and rebalancing. For individuals with complex financial needs, high net worth, or a desire for personalized financial planning, a human advisor is still the superior option. AI cannot yet match human expertise in areas like tax optimization, estate planning, and behavioral coaching. You have complex financial planning needs. If you own a business, have multiple investment accounts, or need inheritance and estate planning, a human advisor can provide tailored strategies that AI cannot. You need guidance during market downturns. During stock market crashes or economic downturns, human advisors provide emotional reassurance and strategic reallocation, while AI operates purely based on algorithms. You're managing a high net worth portfolio. Ultra-high net worth individuals need bespoke investment strategies, tax optimization, and asset protection planning, which AI lacks the ability to fully customize. You value face-to-face communication and trust. Many investors prefer direct interactions with an advisor who understands their specific financial goals, risk appetite, and long-term plans. A couple in their 50s planning for retirement, estate transfer, and tax-efficient wealth distribution would benefit from working with a certified financial planner who can develop long-term strategies beyond simple portfolio management. For many investors, combining AI-powered investing with human financial expertise offers the ideal balance of efficiency, cost savings, and strategic planning. A hybrid approach leverages AI for passive wealth growth, while using human advisors for big-picture financial planning and complex decision-making. AI handles automated investing and portfolio rebalancing. Platforms like Wealthfront, Betterment, and M1 Finance can manage core investments efficiently. Human advisors provide advanced financial planning. When you need tax-efficient investing, inheritance planning, or custom asset allocation, a human expert can optimize your wealth management strategy. You get emotional guidance and data-driven investing. AI prevents irrational trading while human advisors help navigate personal financial challenges like home purchases, medical expenses, and retirement planning. A high-income professional might use AI-powered robo-advisors to automate long-term investing while consulting a human financial advisor to create a tax-efficient retirement strategy. A business owner could let AI manage excess cash flow investments while working with an accountant or financial advisor to develop estate planning and tax-saving strategies. If you want a simple, low-cost, hands-off approach, go with an AI robo-advisor. If you need deep financial expertise, estate planning, or behavioral coaching, work with a human advisor. If you want to optimize both automation and strategy, use a hybrid approach to get the best of both worlds. AI and human financial advisors are not in competition. They are complementary tools that, when used together, can maximize investment growth, minimize risks, and provide a personalized, yet automated financial future. The future of financial management is evolving, with AI robo-advisors offering automation and cost savings while human advisors provide expertise and personalized strategies. The best choice depends on your needs. AI is ideal for hands-off investing. Humans excel in complex financial planning, and a hybrid approach offers the best of both worlds. As technology advances, combining AI's efficiency with human insight could become the smartest way to manage money. Would you trust AI with your finances, or do you prefer human expertise? Let me know in the comments, and don't forget to like, subscribe, and hit the notification bell for more insights on finance and investing.